Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's December 11th. Hope you guys had a wonderful weekend. Time to start off the week this week with the Fed week. This Tuesday and Wednesday will be FOMC meeting, and they are expected to raise rates on Wednesday by 0.25%. So it'll be the last rate hike of the year. Forecast for 2018 is showing about three rate hikes going into next year. So the investors this week will be really looking towards a basically any new change in the policy statement. So they're going to be looking to see if there's any talk about, of course, they're going to look at future possible rate hikes, but obviously there's no real concern or threat so far of inflation, and inflation's been stubbornly low. So they're wondering if is this going to create a pause in rate hikes? You think they're going to slow down, or are they going to continue with these rate hikes? So this is what we're going to be learning this week, and that would be Wednesday. Right today, we don't have any economic news today to go over, but we'll have a little bit later on in the week, like retail sales and stuff like that would be popping up this week. Pardon me about that. Headline news: stock market is up. It's not up a lot today. We'll jump into that in a minute. But as we mentioned, the FOMC is meeting this week, the next 2 days. But we got also the Bank of England. We got the ECB meeting up this week with their policy statement. So this is going to be a busy week for central banks. And then, of course, we had the suicide bombing in New York. It looked like there was an attempt there, but they got the suspect in custody. Apparently, it sounds like a one-off on the suspect. So thankfully, not a lot of people got hurt, and hopefully this is more of an isolated instance versus something else, more things happening. Especially, I mean, this is holiday season. It's kind of scary that you have to worry about these things when you're going out with your loved ones and stuff and enjoying those things. So luckily, it wasn't something that was bigger here. Also on the docket here, we got some job openings. It seems like job openings are decreasing because more jobs are being filled. We had just over 6 million jobs, like 6.15 million openings, and it dropped down to 5.55 million. So that means, as we've been seeing our jobs numbers, job market's been pretty strong out there. So this is obviously a sign that people are getting back to work and such. Here's the bond market. We were actually started up higher. We started the day up higher. We had a 3-year Treasury auction going on earlier today. So it went down a little bit, but not much. It was like about a B rating. But when the 10-year Treasury had their auction today, that's when it started really dropping here. And it became in kind of a C rating, and it didn't do so well. So it's really kind of pushing us right below here, all these marks we've been trying to stay above, like this Fibonacci level. We got the 200-day moving average, and now even the 25-day moving average. Then also later today, we're expected to see a bond rollover, which usually drops us even further down. That could be another at least 20 to 30 basis points further. Now, that doesn't affect the pricing, because what happens is that with these mortgage-backed securities, they just reset and they start the next month worth of pricing. And it doesn't affect the price, it's just more of a reset. And again, unfortunately, on the calendar, it's going to push us further away from that 200-day moving average, which is on the wrong side. So whatever we get on the Fed announcement with the short-term rates probably going up, typically that helps us out, but it may not be enough to kind of push us that much further above the 200-day moving average. It may just bring us back up to the 200-day moving average and keep us below it. So we've been wanting to stay on the other side so we can get better, more improvement in our rates. We want to get those improvements a little bit better than what we have been seeing, and this might keep us below that level right now. So that pretty much wrapped things up. Treasury, there's nothing. It's the same as what we left off on Friday. So Treasury isn't coming. So basically money's coming out of the bond market, kind of going into stocks a little bit, or just coming out of the market in general. So a lot of times you might see it in the Treasury, but even the Treasury is not moving in this scenario here. All right, so that pretty much wraps things up. Rates are getting higher right now. A lot of lenders have priced for the worst so far this morning due to mortgage-backed securities, the 10-year auction not doing so well, and the bond market kind of worsening throughout this morning here. So, but if you guys want to get more updates, just come over to Twitter. You can find me on my handle at Mike Bjork, and I will be posting updates throughout the day then including the market close. You'll get to see how we settle. Hopefully, we get back above that 200-day moving average. But again, we do have the bond rollover today, and which we'll see that tomorrow. All right. Have a wonderful day. Thanks so much for watching. I'll see you guys tomorrow. Bye bye.